Okay, this is the July market report. Now what we saw in activity in June, and we'll throw May in as well, we saw that burst of activity we've been looking for from the weather-related pullback of activity we saw January, February, and March. So that activity really was released very nicely. However, it doesn't really give us a good feel for where the market really is right now, because once that inventory and that activity has been released, then you'll find out where the market really is sort of on a long-term equilibrium. So we think probably July, August, and September, the third quarter of this year, is where we'll really be able to see how the market is moving and the underlying demand for buyers and where listings are headed. But overall, the activity has been pretty strong. On the positive note, inventories are still low across the board. So that's happy for seller, not so happy for buyers. Buyers are still seeing some frustration in finding homes for sale. We're also seeing that with interest rates rising and inventories being lower and values rising, we're seeing the cost of owning a home up about 20% compared to last year, which will over time take buyers out of the market if that continues, and it will continue. So we do anticipate there probably will be fewer buyers in the market going forward, but there are also fewer listings, at least at the moment, so we're seeing the feel for the market just as strong. The frenzy is still there. Now, the specific numbers for Washtenaw County are, Washtenaw has again been the market that's sort of settled in first compared to the other 4 counties of southeast Michigan, but the numbers are still strong. Listing activity has been rising both for the under $500,000, over $500,000, which is a little faster pace for the over $500,000, but that's interesting to see. That means sellers are seeing the values are rising, they're starting to put their homes in the market and release that demand. Buyer activity is also very strong. It still is, and it is at the moment outpacing listing activity, but we're seeing those numbers start to converge, and we are certainly seeing that in the luxury market, the over $500,000 market. We're seeing listing inventories actually start to rise. Values are rising in that segment, but they're not rising quite as fast as they were before. In the under $500,000 segment, values are still rising a little bit faster, but we expect to see maybe in the next 90 days or so, listing inventories actually start to rise a little bit and move us a little bit toward equilibrium. Overall, what you're going to see for the next quarter and probably even into the next year is a month-by-month continuing shift where listing inventories are getting a little bit better, not quite as scarce. Buyer activity is slowing a little bit, not quite crazy, but a little bit more. And value is continuing to rise, but probably at a slower pace. All of that's good news. That's the pace that we've been going through for the last 2 years has been too hectic. So we're settling into more of a balanced market. Whether that balance hits this year, probably doubtful, probably more like spring of next year.